Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for Wednesday, January 14th, 2026. We had a major day of surprises and curveballs today. Of course, the big one was the Supreme Court tariff ruling getting delayed, despite all the growing expectations that it would arrive this morning at 10 a.m. Eastern. The current rumors are that the ruling will get pushed back to June, and that's often when large, high-profile cases land late in the term right before the Supreme Court's recess. That means that we now have the pleasure of tariff issues as a market overhang, which also means that we have to remain flexible, disciplined with our position sizing, and ready for headline-driven volatility. But we were already planning on a volatile 2026, so I guess add it to the pile. Then we had volatility also enter the energy sector. Oil prices fell 5% in minutes after President Trump says that killings have stopped and there are no plans for executions in Iran. I don't write this, I just read the tweets. And lastly, we have the tech sector dragging from the Oracle bondholders lawsuit, which alleges that the company failed to properly disclose how much additional debt it would need to fund its AI data center buildout. Investors bought large bond offerings only to see Oracle return to the market shortly after with significantly more borrowing tied to AI. Once the scale of the financing became clear, bond prices fell and investors argue they were harmed by the lack of transparency. Now, as a result, the AI capex of many large players is coming into question as investors once again start to reprice risk, not just at the equity level, but in credit markets too. More debt means higher sensitivity to interest rates, more scrutiny on leverage, and less tolerance for surprises around future financing needs. With all that shaking the markets, we are seeing small cap stocks outperform. The S&P 500 was down over 0.5% today, but over 65% of companies in the index were positive for the day, which illustrates that outperformance by the smaller players. This will definitely be something that we need to keep watching in 2026, and sustained outperformance by small caps is a warning sign that we are closer to the end of a major cyclical run. So with all that said, let's get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and you can see that we gapped down into the open and dropped all the way down to perfectly test our trend line. And this is our third retest because these last 2 points didn't quite touch the trend line. The last time we bounced off the trend line was on the 21st of November, and the time before that was all the way at the April tariff bottom. So now this is actually a valid established trend line on the SPX because we have that third touch point. And traditionally, when you get that third touch point, you usually see a bit of a recovery, and we have that gap to the upside to close. So for me, really the main thing to watch here is, can we hold this support? And then are we going to close this gap and test all-time highs? Overall, the structure from the 21st of November, we're still making higher low, higher low, higher low. So right now it's all good, assuming we can continue that, and obviously higher high along the way. Higher high, higher low. So if we can maintain that, we are looking fine. If we go over to the NASDAQ in comparison, it broke down from its trend line, which it has tagged pretty much each of these instances. And this also goes all the way back to the April tariff low, which is getting way back there, but just so you can see how that's connected through. And even though we closed back within the range, I never like to see wicks below a major level like that. It just makes me a bit more concerned. So I think the main thing for the NASDAQ right now, we are still making higher lows the whole way up. So we do have that working in our favor, but we have this major resistance level at 25,838 or 840. And that goes all the way back to this early December period here, the 5th through the 8th. And if we can break above that, which we attempted yesterday before this rejection, then that would signal to me that we are on our way to higher prices, and we can truly consider this deviation, this wick below. But I'm a little bit on alert because of that weakness. Okay, moving on to oil really quickly, just because we mentioned it in the intro, and WTI was into the 200-day moving average. Interesting how we get into resistance zones right when these kinds of tweets happen. You can see that mean reversion was spiked 2 standard deviations This is on the 4-hour, and we were above 70. So classic sell signals. Trump tweets, and this drops over 5%, bounces back up, but has maintained that sell pressure. We do have a sell signal. We had a buy signal down here when we were below 70, and we had that mean reversion dot, 2 standard deviations to the lower end. So if you are using IADSS, it works really well for commodities too. And you know what? While we're here, let's pull up natural gas, NG1. There are lots of natural gas charts, but I like the NG1 chart personally. And if we're going into the 4-hour, I have an alert set right here. I think the 1 hour, or I'm sorry, the daily is where we're going to get the most edge, because the daily chart, you can see that we're getting into Confluence model center cloud support. We're at a zone where natural gas has bounced a ton all the way back since December of 2024, and we are getting those oversold conditions. So I'm tempted to take a little stab here at a natural gas long. I normally do that through BOIL, 2x levered long natural gas ETF. All right, let's start today on Tesla with my messy Tesla chart. It's starting to look like a Cubist Malevich painting or something like that, if I'm going to be kind. But our daily RSI uptrend is still holding, so we're looking good here on the daily, printing higher lows. Despite the little bit of a pullback the last 2 days, I'm actually surprised that the market pulled back on Elon stating that FSD is just going to be subscription-based, because that is going to be a huge cash generator for the business, but that is a different story. Now, if we are looking at this on the 4-hour, we pulled back, we bounced right into support, and we are still shaping up potentially a little bit of an inverse head and shoulders here for a smaller time frame recovery. I still maintain that the major resistance that we need to test, just looking at the 4-hour, how it's recovering here on mean reversion and RSI, is that 475 zone. So if we can get a breakout, actually let's measure this inverse head and shoulders to see where that price target would be. And if we come up and break this neckline, depending on where that's going to be, that would have us at 480. So 475, 480, that is logical resistance to me. And right now, if we are looking at the options action on Tesla, the major put wall is sitting at 430, which is right down here, just underneath. And the call wall is sitting at 460, just overhead. So we're just trapped in the middle of the range. For the big expiry next Friday, I believe the major call wall is actually at 450, which is right where we rejected, when was that? On Tuesday. So keep those levels in mind. 460 break to the upside, near term 450, and then 430 for the put wall underneath for support. All right, Bitcoin grinding up. Yes, we are getting to overbought territory on the daily, but as we have discussed, this can run quite a bit more when things get moving here. So we definitely can move higher to the upside for Bitcoin. We are into a little bit of resistance today at that first 98K level. And these are the zones that I've drawn out. So 98K, we covered this a few weeks ago, to 103.5. That's our biggest chance of just rejection and a lower low. Then we have a little bit more even chance of chopping around and finding equilibrium if we get into this middle zone, which is 103.5 to 108.5. And then above that in the green zone, that gives us a much higher chance of eventually printing all-time highs in the near term. And my base case is still that unless this proves otherwise, this is merely a relief rally, and that just like last cycle, we will most likely reject at the 200-day moving average. Now, I'm happy to be proven wrong there. I would love to be proven wrong just because of my crypto holdings, but we have to assume that a daily, or I guess in this case, a weekly lower high after a big drop off like this is the most likely scenario. Now, if we do zoom into the 4-hour, you can see our breakout there from that 94,500 level, came back down, back tested it for support, moved away to the next resistance. This is our next fib level right at 98K. And now we're pulling back a little bit after hours. We're just, we could even come back and test this breakout zone one more time for support. But after an impulsive move like this, price action needs a little bit of a break. So impulsive move, and then you'll get a corrective move. It can just be overlapping price action. And then the next move higher, it could be impulsive move and actually a bit of a corrective move. We could drop below the zone. and then continue on. But you have to imagine that some kind of cooling is going to happen. And the guide I always use is for daily time frame higher lows. I look to the 1 hour. When the 1 hour starts to get reset, and we've been in an uptrend, so reset for me on the 1 hour is getting to 40. Then that often marks the point where we can bounce and continue on. So a little trick you can use there. All right, now looking at Solana, Solana is still stair-stepping its way up. We broke out from that major $144 level. We are back testing that and just dropped a little bit below to 143.50, 143.60 right now. So it would be good to see this turnaround soon and flip this general zone that was resistance into support. But then Solana has more work to do in the near term than Bitcoin. I suppose they both are at resistance because you have that 98K, but Solana has this major overhead trend line that goes back all the way to all-time highs in mid-September there. So that's our last major trend line hurdle, but we still have this price target in play of 180. So taking this a day at a time, and the daily is getting a little bit overheated, but it has actually more room to move than Bitcoin does. And if we look to the 4 hour, this pullback is totally normal. We have been, a little bit overheated, but our 4 hour size support for the uptrend for Solana is about 47 right now during this current move. So watch that level. And if you break below 47, that's telling you that we're going to see a bit more of a pullback and a bit more severe correction before attempting a move higher. I imagine that might come after we reject from this trend line, reset a little bit, and then give it a go again. I could see that corresponding with something like this and then moving away. So we'll again take this one day at a time, but this is going to have to make a decision soon between support and resistance on these diagonal trend lines, and maintaining above 144 would be a much better sign of strength for Solana. Okay, MicroStrategy, I should have covered this right after Bitcoin, but started seeing a bit of a recovery today, a very volatile day, getting as high as $190, pulling back all the way to 175. We do have a little bit of a gap on MicroStrategy, a gap up here. So that gap fill would be at 173. But the good thing today was, for the first time in months, actually since the 7th of October, we closed back within the Confluence Model Center Cloud. So a subtle sign of strength. We have resistance overhead at that psychological $200 level, this previous swing high from early December there. And then 230 is going to be the next resistance zone, and then this trend line that we broke down from. So seeing the recovery is good, volume increasing is good, and as long as strength maintains in Bitcoin, we should do okay for MicroStrategy and other Bitcoin proxies. A lot of the Bitcoin miners performed well today also. CleanSpark is starting to move away. NJ in the community noted that we have a little inverse head and shoulders here, which is pointing to right around $15, which is this resistance zone. So we are getting overheated, but this could take one more move higher, and that would be a good near-term zone to consider taking some profits. If we do look at another name like Hive, which has had a nice recovery, we're getting into an uptrend here on the 4 hour. This is getting very overbought, 2.2 standard deviations to the upside on the 4 hour. So this is suggesting Hive needs to cool off, but it is encouraging to see that this made higher highs on this recovery. And my trading view is being annoying once again. And we're back. All right, so it is making higher highs, a pullback, anywhere down to about $3. I imagine that would be a good place to see support just to maintain the structure. But if we are looking on the daily time frame, the daily time frame still has room to move on the recovery here for Hive. Okay, Galaxy, where we just got into some calls. This one is performing quite well, broke above the 50%, continuing on this recovery. If we can get above 30, that puts this double bottom price target into play. We actually have a mini double bottom too. If we go into the 4 hour, you could also have mapped a price target off this little double bottom for a shorter term move. So if we're just measuring that out right there, I think that might have gotten us to, now we still have a little bit to go. So that's suggesting a near term move to 28.77, let's say 29. We almost got there today. And then might hit some resistance or some chop for a bit, which kind of aligns with what the 4 hour is saying. But if we can make it a little higher, this major double bottom price target is much more exciting because that brings us all the way back up to 38 from our current price of 28 on Galaxy. So benefiting from crypto catching a bit of a bid. All right, quantum names started to see some strength today. Yes, we have a little bit of a mean reversion dot, but we have a lot more to run on RSI on the daily here on QBTS. And we are maintaining a nice structure of higher lows the whole way through. And our major resistance zone to break out from is at about that $32 to $33 range. So if we can break through there, confluence model upper cloud, then we can be on our way to the higher $40 price targets for QBTS. Okay, Adobe continuing to show weakness today, and I'm on the weekly chart, so let's go back to the daily time frame. And it dropped down a little bit more below our 310 level. Now, we do have a major trend line coming in here at 300, and we are about to print a mean reversion dot on the daily. This has dropped a little bit more than I would like to see for Adobe, but let's take it from the larger time frames. If we zoom out to the weekly, this trend line here that we're getting into has been a major support since March of 2020. Then we tagged it again in September of 22, and we're just coming into it again. So with how oversold we are on the daily, this bullish divergence that we're seeing on the weekly time frame with higher highs in the RSI, lower highs in the, or I'm sorry, lower lows in the prices, that means that we should soon be turning around and finding a change in momentum. And a third retest of a trend line like this has the highest probability chance of bouncing. So keep that in mind. I'm looking at that $300 level, probably add to the position a little bit. And the calls are expiring in September. So we've got plenty of time on this, and this is suggesting that this should soon turn around. But there has been general weakness in the software space. Okay, software weakness aside, let's just look at the tech space, which, as we discussed in the intro, has also seen a little bit of weakness. And I'm just starting on the weekly time frame here for Meta because we have been breaking down. We are getting into a major support trend line that I think is worth watching. This goes all the way back to October of 22. We tagged it on that tariff bottom. We almost touched it again in November. And we're coming in for a fourth time. That intersection would be right around 600, which is an important level for Meta, just that psychological $600 level. And it would be the last line in the sand to really help us print a higher low and have some hopes of recovery here. But overall, this is looking weak, just in terms of not being able to make a higher high. We're still in a daily and weekly downtrend here on Meta. And is a name, even though I have a little position that I built from this earnings related pullback, I would be keen to get out of because Google and others are obviously stronger. So if we go to Google in contrast, just that strength is evident. It's almost to the $350 price target. And then Amazon is kind of middle of the road. It definitely suffered a bit today as well, but it has just been in this tightening range and looks like it is going to attempt to break higher eventually. It probably needs to cool off just a little bit, but we've been holding uptrend support here at 37 on the daily RSI for Amazon. And the last one, Microsoft. Microsoft clearly in a downtrend. I mean, the chart's just been so clear. Double top, break of this swing low right here, bounce for support, break down, resistance, 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 and then drop away in the confluence model lower band. 200-day moving average is now resistance, and the price target remains at 425, which isn't percentage-wise too far to the downside now. We are, how far is that from our close today? Oh, about 7.4%. So if we get a bounce and retest the 200-day moving average for resistance again, that could be a better place to consider shorting because the 4-hour is suggesting we might see a bit of a relief bounce here soon just to help with these oversold conditions. Okay, so that is it for the charts. The main thing for me tomorrow is to watch the indices to see if support will hold. The NASDAQ is the main one I'm keeping my eye on, with mega cap tech underperforming right now and that wick that we got below support. Now, both the S&P 500 and NASDAQ do have a gap to the upside now, and those often do fill, but the mega cap tech charts While they are oversold on some smaller time frames, the 4-hour and the daily would suggest that they still have a little bit more room to go to the downside, so we might see a little bit more pressure ahead, but we'll just take it one day at a time, and I'll see you tomorrow for another daily market recap. Bye for now.